Well, holding out so well after a long weekend. This is exactly the market that you want to welcome yourself with. 294 points higher for the Nifty. The fact that we made it to that 24,100 print, it was the Nifty Bank actually, which gave us that leg up thanks to the movement on ICICI Bank. HDFC Bank was a whisker away from that all-time high in any case on Thursday itself when we went into the long weekend. And there we are, not just the Nifty Bank, but the Nifty itself doing very smartly in trade. Also after that, the fact that IT seems to have at least bottomed out, or maybe it's a dead cat bounce. We'll figure that out with our experts. But Infosys held out smartly. You've got HCL Technologies, Tata Elxsi, all these stocks are actually on a tear today. That said, Telecom continues strong. Oil and gas, metals are the other sectors which are participating, but you've got a fabulous breadth as well at your hands. Within the F&O universe alone, you've got 199 stocks which are standing to the advances, with names like Idea holding up 10%. There's Nalco up 6% right now. IDFC First higher by 5.8%, and HDFC AMC as well, which is going very strong with almost a 6% uptick. But the litmus test, Cheryl, what about the global cues?
Yes, global cues, that's the one that's a cause of worry, given the fact that you have Mag 7, Magnificent 7 stocks that are actually under pressure in their pre-market trading session, given the fact that you have now commentary coming in from Donald Trump that he was trying to look at ways of how he can actually remove the Fed Chair Jerome Powell. So this sort of a commentary has actually sent some shockwaves, at least when you talk about the US markets and US futures. They're under pressure in trade as we speak. Also, the rest of the Europe has just opened for trade. So let's take a look at what the European markets are doing, given the fact that you have the US futures that are down and out, with NASDAQ futures down in excess of 1%. You also have Dow futures that is weak in trade, as well as S&P 500 futures. That one is weak in today's trading session. Also, let's take a note. I stand corrected. The European markets are shut today on account of Easter Monday. So no cues coming in from the European side of the market. But yes, the US markets under pressure, and looks like this pressure is not going to go away very soon, Aisha, at least for the US markets.
Yeah, that seems to be the case. But for now, we're really outperforming the rest of the globe, holding out just so smartly. The US futures as well seem to be a lot more tempered, and we are holding up at that 24,100 print. Kunal, hi afternoon. What's it looking like? Will we manage to sustain the gains even if global markets aren't supportive?
Yeah, I think we should sustain the gain, and this seems to be a very strong, powerful move. Third day on a trot where we saw the index going on a long weekend as such, and then the Nifty rewarding with almost to 5,300 points kind of a move. The dollar index is down to 97.7, 97.75. I think the last I'd seen for the DXY. That is another reason why you're seeing such a kind of a fervor. The only point which I'm actually looking out for in terms of sector moves is the commodity section, because I think now this could be a very good time for many of the commodity stocks to start firing up and going into a strong momentum uptick. But I think other than that, no complaints. Banking stocks have done reasonably well. The NBFC pocket has also recovered. Many of the stocks have come back to their, I think, 52-week highs or lifetime high basis. You're seeing short covering across multiple pockets, PSUs, autos, ITs, etc. So I believe in that context, it's a very well spread out market.
All right, so that is a very well spread out market, given the fact that the rally is only continuing, fifth straight day of gains coming in for the markets. And if you go by it, it could be could be headed for the biggest 5-day rally since early 2021. But what the setup is looking like, and what should one do while talking about strategizing their portfolio? We have Deepak Shenoy joining us right now. Very good afternoon to you, Deepak. Thank you so much for joining us. And the key question being is that will this rally sustain going ahead? This is the time to celebrate, or do you think that it's just a 90-day pause coming in on those tariffs, so just take it easy?
Well, to be fair, we can't say anything right now because every day there's a new, piece of information that comes in from the US or from other countries. But I think by and large, the world has come to some kind of an intermediate level thought process that it's going to be difficult for the US to impose the kind of tariffs that they've initially thought of. But perhaps a 10% tariff is more or less likely across the board. Perhaps a little more for China, given, and they're already anyway more, about 20%, I think, anyways. So there is a differential there, but there is also the fact that much of this is not going to be as dramatically changing for the world trade as it used to be earlier. And there are some positive signs for India as a country, specifically because we are not so clued in into the international trade scene. I don't think we should think of ourselves as we'll try to replace China. We're way behind. We are not going to be able to meaningfully do anything in that respect. But because we are a relatively domestic oriented economy, there is a large domestic market. A lot of our companies serve our domestic market, whether it is from consumption, from even a manufacturing or an infrastructure basis. There is a lot of stocks that might actually benefit if India continues on its journey, and it has a lot of momentum behind it. So I feel here that internationally we will see a lot more volatility, but domestic market from an economic perspective may still be okay. A lot of our markets depend on fund flows. If FIs keep coming as strongly as they've been coming in the last few weeks, last week, in fact, last 1 week or so, then I think the markets are likely to go, northwards more than down. So there is a lot of that factors in. Economically, I think longer term we're still okay.
Good afternoon and congratulations. Firstly, Capital Mind Mutual Fund has finally got the regulator nod. So tell me, what's the investment rationale going to be like, given that there are so many uncertainties out there in the markets?
In fact, Aisha, thanks so much. Firstly, I mean, we already at the parent level run PMS, so we've been managing funds already, but hopefully at the retail level we'll be able to do more for more people. But I mean, I think overall the rationale, in general in India, the markets are going to give you significant returns over a long term compared to perhaps most other instruments. In fact, some of the better ways to participate even in debt or in a hybrid kind of a situation where you want a combination of equity and debt tends to be a mutual fund. So that's one of those things that is attracting us, is that we can offer more to investors. And I think in the longer term, equity should give you great returns as it has in the last 30, but also because we're a growing economy. And we're probably going into the phase where we're going past this $2,000 per capita, probably going towards a $5,000 to $10,000 per capita in the next 20 years. Very excited about how markets will play a role. Our investment rationale, of course, remains, stay quantitative, focus on data, look at a lot of look at a marketplace as a whole rather than just individual companies to make a decision, and also at the micro level. Opportunities will spring up in certain individual companies where we will definitely want to take a look, and that may be either in the debt markets or in the equity markets or in some quasi debt or quasi equity instruments as well. So excited about the opportunity. I think unfortunately we can't have a different investment rationale than everybody else. We're very bullish on India in the long term.
Yeah, you've got to be. But, given the point that you made, Deepak, about the per capita income rising, the first port of call that comes to your mind is consumption. While the means and mediums of consumption may change, but that's going to be the first go-to. How are you looking at that space right now? Because, while in India it's still a very narrow market, the large pool is still very much the staples.
It's a very interesting thing, Aisha. In fact, if you look at the top, maybe 15% of households, which perhaps form most of the middle and upper middle class that you might see in this country, that's about 20 crore people. 20 crore is bigger than the size of most European countries. And we have a much higher per capita there than we have in the rest of the country, right? So you have consumption which takes different formats. In India, consumption used to be equated with FMCG. But my point is, how much more toothpaste will you buy? It's not really a Indian consumption thing anymore. What was called consumption in the last 20 years was soaps and toothpaste and toothbrushes. But the next 20 years is going to be more about travel, tourism, consumption of higher brand goods, the coffee chains, the restaurant chains. I think all of this is going to contribute to consumption, including experiences in the tourism areas, in other aspects of these things, and the technology, the players in the back end that will actually kind of power this stuff as well. I think that is the new consumption story that we're talking about. It may not necessarily be only the premium players, like you might have a premium clothing brands and all that stuff, but I think it's also across the board, whether it is instant home delivery, startups or companies that are listed that go into this space. I think consumption now goes across this part of the ecosystem. I would say here, you don't necessarily mean that India's consumption will go up, meaning all these companies will do well. Because if you have 5 medical shops on a street where you had only one medical shop, the consumption of medicines can go up, but it is distributed across 5 shops. So not each shop will actually have a lesser profit. That's what's happening to much of the consumption space now. There's so much more companies coming here to serve you that every one of them is getting a slightly smaller market share, but the market overall is growing. So I'm very positive on consumption. I can't say that any one consumption player will come out and become a clear winner. And we're seeing this in the paint space, though it's not really consumption. But one company or 2 companies owned the roost there, and now you're seeing that more companies are coming in and they're breaking into it. India may still be using more paints, but not one paint. The one paint player may not see as much in terms of profitability growth as they used to see earlier.
Right, so that's the overall view coming in on the consumption pack. But on that note, we slip into a break on this edition of Closing Trades. But in a sobering update, Pope Francis has passed away at the age of 88. Remember, he had been suffering from severe case of double pneumonia and has been unwell over the past 12 years of his reign as the head of the Roman Catholic Church. The Vatican made the announcement in a video statement, ending an often turbulent reign marked by division and tension as he sought to overhaul the hidebound institution. You have condolences messages being pouring from across the head of states globally. Welcome back. You're watching Closing Trades right here in ET now. A healthy day coming in for the markets, given the fact that you have Nifty surpassing that 24,100 mark, Nifty Bank hitting all-time high levels, and the likes of HDFC Bank, ICICI Bank, all of them hovering around that 52-week high levels. Kunal, but the key question being is, do you think that the outperformance by the banks will sustain going ahead now?
So I think at some point of time it should moderate after this 5,000 point rally. But then I think this tells you that this is the leading sector. And this is why I think over the last 1 week, 3 months or so, Bank Nifty and the banking stocks were outperforming. It's very difficult to now catch these banking stocks at current levels for someone who's missed out in this maybe this last 5,000 point rally for the banking index. So maybe I think you'll have to probably make good with the tier 2 performing names or the bit of underperformers in this leg. But I strongly believe that these are kind of leadership moves or leadership breakouts which happen within sectors and across sectors for markets. And these kind of moves, they generally unfold itself into multi-month, multi-quarter upticks for many of the sectors. And in this case, we're looking at a formidable heavyweight sector from the Nifty 50 also. So I think I would probably expect many of these banking stocks to do extremely well from here on to say the next 1 month, 3 month or 6 month perspective. And my expectation is that the likes of ICICI Bank, which has been an underperformer today, HDFC Bank, Kotak Bank, even the likes of Axis, IndusInd Bank, I think they should start continuing this momentum much more ferociously even from current levels.
Deepak, I want to get your thoughts in on banks. I don't think the debate is really about the creme private banking names, but it's more about whether you go now down the rung and do you add more positions to your existing banking portfolio.
So, Aisha, I think the banking sector in general has had two issues. One is that credit growth has not been good at all. About 10%, 11%, even recently, as I think there's only about 10.5% credit growth, 10.5% deposit growth. Deposits won't grow unless you grow credit. So as a banking system in general, we're not growing, meaningfully fast enough for banks to grow, to kind of justify the valuations that they've been at in the past. And definitely, I mean, it's still probably debatable about now, but also they have had healthier balance sheets. So their credit, it's not the lack of willingness to lend is not based on their capital availability. Their capital buffers are quite strong. Secondly, of course, it's been the turmoil in general worldwide that has caused or restrained people from expanding operations, from taking on corporate capex, and a meaningful slowdown by the RBI, which had kind of sought to say you're growing retail credit too much, so reduce that. So both of these things are kind of behind us in the sense that now I think as more clarity will flow after all the damage that the US has done in the global economy. I think as things get better, more capex opportunities will come their way. Retail loans wise, the growth has slowed down considerably. RBI has also eased up, and I think there will be a growth back in that portfolio as well. So I think there is these two things that are kind of helping the banking companies help, and we own a bunch of these in the PMS. But the idea here is the stronger banks and the stronger NBFCs will benefit quite a bit. There are some issues still happening with microfinance institutions, with the smaller banks where the cost of deposits continues to be quite high, and therefore their margins are not as good as the larger banks have. So I think that pushes us more towards looking at the larger banks, whether they're private or public, to fuel themselves in this expansion. The smaller ones will follow, and the risk reward is very different in them. But I think overall the banking sector should do well in the coming 1 year, 1.5 years at least.
Right, so banking space, that one in the spotlight, hopefully will do well or continue to do well for the next 1 year or so. But remember, the banks have come out with their earnings, a good one at that. You had good performance coming from HDFC Bank as well as ICICI Bank. But apart from the banking space, you have the IT sector also that has been in focus because players are remaining cautious, especially given the fact that there is global uncertainties around. You have the major IT companies share weak guidance, even as the results have come in mixed. Share this year with the IT roundup.
Well, overall, if we're saying on a long-term basis, there is a question mark coming in that what would be the sustenance numbers going ahead for the IT companies. The muted performance coming in the third quarter from the large cap IT companies. Also, of course, the expectations also for this quarter have been modest. Now, there is no cancellation of orders currently, but there would be a delay in the decision making, and that doesn't augur well for the IT segment. The clients also prioritizing much more on the cost optimization and how the budgets will actually pan out. That is something to watch out for. And importantly, I would also like to point out is the discretionary spends that has remained still soft, and they have been remained soft over the last 1.5 to 2 years as the client is continuing to focus on cost cutting as well. Interestingly, headcount addition that is low now, and that we could have seen in Infosys numbers as well. The key concern being the continuous delay which is happening because of the spending due to the tariff issues coming in. Now, interestingly, the key highlights are actually looking a bit decent. That is that the healthy deal wins are still there, but the guidance for FY26 that still remains healthy. Now, the IT index performance, they have been significantly underperforming Nifty. Interestingly, post correction, the valuation has become a bit more realistic. The weightages which was there of IT in the Nifty index, that has actually significantly down from almost 18% to 12%. Nifty IT index last 3 months is down 21% as compared to Nifty performance, which is in the green, which is more than 3% right now. And IT sector overall analysis, if you look at it, the numbers over there, main thing is the guidance, the overall the revenue margins, they have been stable as expected, what has come in the overall report card, but the main thing is the revenue guidance, especially for FY26 Q1, that has not been encouraging. The valuations after corrections, they are looking attractive. Perhaps that might be the reason of some buying in today's trade today. Wipro That's the numbers are coming almost, you could say, below that 5-year averages in Infosys and TCS as well. So it'll be very interesting to get to know about other IT companies also as they come out with the results this week.
All right. That's the take coming in on IT and how some of these big boys actually stack up so far. But Deepak, the bottom multiples for, the tier one companies are already at, their 10-year average. The stocks, of course, would bottom out historically as they do before earnings turn tide. Do you think that's the time now?
It's a good question. In fact, I think the problem with IT is what do you do if your customers are probably wondering what the next big move is and whether they should invest. If you're a large US company today, are you considering expanding your operations? Where will you expand your operations? What will you do? You don't know, because if you expand operations in the US and America makes a deal with China on tariffs, then your expansion is hosed because you don't want that to come in at some point. But at the same time, you don't know whether the tariffs are going to stay, they're going to increase. So everybody's on this wait and watch mode until they get into something bigger. So revenue growth opportunities in these companies is going to be limited and muted to the extent that people are going to see hits on profitability, people are going to see hits on their margins, their customers, that is. Therefore, they're not going to meaningfully want to expand their IT outsourcing. However, I do see one change because of the change in visa approach in the US. When work has to be done, more work will be done in India, that is offshore from the US, than it is done on site, simply because availability relatively still remains lower in the US. So there's going to be more work done outside of the US, even for US companies. And services tariffs have not even been talked about or introduced. So I don't think they will be. Plus, America is one of the world's largest exporter of tariffs by a huge margin. And therefore, I don't think the US will want meaningful, retaliation on service tariffs. So I don't think they will go there. So that these two things remain in their benefit. I would say still wait and watch. Just don't jump in just now, because you don't know what's going to change. And when there's more clarity, you might. I mean, the prices tend to go up when the markets go up, but I think clarity in the economic growth is what's going to drive future valuations in the IT sector. I would say they're fairly valued right now, so I don't think there's a huge, sell everything else and buy IT. But if it comes to that point, that may be a different thing. But right now, I would still say just wait and watch. Let the market get more clarity for you before you invest.
All right, so that's the check coming in on the IT space. On that note, thank you so much, Deepak, for joining us on the show and giving us your take. And also congratulations to you and your team at Capital Mind. But let's move on. And we have Aditya Agarwala also joining us on the show. Very good afternoon to you, Aditya. Thank you so much for waiting by patiently. Well, it's a good day coming in for the markets. No one's complaining. But I want to know your view on the broader markets, especially the mid-cap and the small-cap. Do you think that space is also attractive?
Good afternoon, Cheryl. Thanks for the show. I think there is a bit of a covering or maybe a pullback that you will see on the broader markets now, given the fact that the Bank Nifty and the Nifty have already outperformed significantly over past 2 weeks. So I think now the leadership might change to the broader markets. Both the mid cap and the small cap indices, I think, will play important role reversal now going ahead. At least for this week, I think you will have a slight outperformance from both the Nifty mid cap and the small cap. And I think Bank Nifty might just take a little bit of a breather because it's clearly trading at an extremely overbought zone, back-to-back 5 trading sessions of gains. I think it's a bit stretched at the moment, might take a breather while your broader markets will take leadership.
Right, okay. That's the take coming in on how the markets are positioned right now. But Aditya, what about your stock ideas?
So I've got a couple of buy recommendations, and I believe a lot of pullback is going to come in the auto space, especially the two-wheeler space. So I like Hero Moto here. I think it's poised for a good short covering rally. Or maybe an up move also, fresh long addition from current levels. So for a target of 4120, I've got a buy here with a stop loss at 3800 on the downside. The second is from the chemical space. SRF has actually resumed its uptrend after a good consolidation. So at current levels, there's a buyer in the stock for a target of 3250 with a stop loss at 2900 on the downside.
Some of the stock ideas coming in from Aditya. What about you, Kunal? What's your closing trade?
So there'll be a buy on trend. After quite some time, the stock is looking attractive in terms of risk reward. And looks like that the stock is likely to close the gap which has been created, I think, a week or two back for Trent, when the stock gapped down from that 5,500 levels to sub 5,000 mark. So that's a buy. Expect the stock to move towards 5,500, 5,700 mark.
Okay, those are some interesting stock ideas coming your way. We'll take a very quick break. When we come back, the last half an hour of trade this afternoon. Back with closing trades right here on ET Now. Much of the world markets are also going to be shut today. So no Hong Kong, most of Europe is going to be closed. But we are holding out quite okay. About a 300-point move is what you're already sitting at for the Nifty. 24,100 conquered in trade. And it's been quite the consistent move thanks to the way the Nifty Bank has actually participated and contributed to the rally. In fact, in the last 10 days alone, the Nifty Bank, not just today with that 2% move, in the last 10 days also, the move on the Nifty Bank has been quite significant. In the last 1 month alone, you've seen an 8% move. And the contributors are very interesting. While it started off with HDFC Bank, ICICI Bank, and of course Kotak, which has been the strongest in the past month. And then, of course, you've now slowly since last week also seen contribution from Indices, from Axis, Indian Bank, SBI has moved up quite smartly, and the PSBs as well are beginning to participate in the rally. But we've got Pashupati Adani too joining in on the show right now. Pashupati, hi, good afternoon. Good to have you on the show as always. Just wondering whether to actually give in to this move by the India equity markets or wait by for that 90-day reprieve on tariffs and then see how the world shapes up.
Well, I've always been erring on the side of caution, so I would say take a step back and wait. There are obviously still some places where there is money is being attracted, like for example, you've got there was a run in defense stocks. They've come off a little bit. Now they're back, coming down, and then they're going back up again. So that's another point. And plus, the government is continuing to spend to continue and finish the rails, the roads, and the infrastructure. So those stocks are still chugging along nicely. They keep going up and down with the market in general, but they're a pretty nice place to be. Aisha?
Right. Very good afternoon to you, Pashupati. This is Shell also joining in the conversation. I just wanted to get your view actually on various sectors that have seen a good up move in tandem with the benchmark indices. Yes, banks have outperformed as well. You also have the metal sector, realty space, all of them seeing good strength. What's your take? Do you think these sectors merit a look right now?
Well, I definitely think that metals are a good place to be. I'm not so wild about realty. I also don't like banks so much, and I don't like IT at all. I don't understand why the IT markets are beginning to move up, because that sector looks like it's under some pressure. So again, once things settle down and maybe the tariff situation also gets better, then again people will be relooking at these sectors. But frankly, the IT sector with the AI being in the game looks tough. Banking sector, well, hopefully people will get back to working and not defaulting on their loans. So that will be good. So it's all good at the moment.
Pashupati, at all on IT, does it seem like the bad news is in the price, or do you think there's more to go?
Honestly, you see statements like we haven't seen a cutback this quarter. It looks like they are going to get some cutback. And I think that, it is coming because, AI is gradually replacing the jobs. Plus the labor policy of the United States is not going to allow people to move as easily as they used to, because the immigration department seems to be having job cuts and are not able to process things. So I think at the end of it all, the IT sector is going to have to get some pressure on it, and I'm surprised it hasn't seen it so far.
Right, so that's the take coming in on the IT space. That brings me to the next question, Kunal, to you. Given the fact that, yes, IT sector, I think we did speak about this one also at length today, given the fact that this one has underperformed the benchmark indices right now, given the fact that it has underperformed so much, do you think it looks good to you, at least mid-tier IT companies, if not the large cap?
Yeah, I believe large cap IT stocks itself are a good bet at current levels. And what happens eventually is that there comes a point where a sector gets beaten down 30-40% in a very sharp manner, and then these extreme points where the indicators become hugely oversold becomes zones where the stocks and the sector itself remains more sideways for a prolonged period of time, because what happens is that the major part of the pain could probably be out for these IT stocks, but then expecting these stocks to get into a V-shaped recovery depends on the kind of news flow surrounding the sector as well as individual stocks. So I think in that sense, what we may probably have witnessed is that a major part of the correction could be behind for these IT stocks. Price wise, I believe that they are good bets from a medium to long term play. But short term wise, you might probably expect that these stocks may give you those odd rallies of 5-7% on a very short term basis, and then get back into corrective phase, come back into that lower end of the price ranges, try and consolidate. So consolidation should be the name of the game for many of these IT stocks from here on. But that, I think, should be a very good opportunity for long-term investors.
Right, so that's the take coming in on the IT space. Aditya, what's your take actually on the power sector? Do you think that this one is looking good after this recent rally, or you think it's a wait and watch mode when you talk about the power names, the like of a JSW Energy, or for the matter of fact BHEL, or some of the PSU names?
Well, I think it still makes sense to go long on these power stocks. To start with, Tata Power definitely stands out for me. I think it's poised to test levels of 420, 440 on the upside. Talk about JSW Energy, that too, I think is looking very attractive to me. You can go long on that. In fact, a lot of these companies who are into solar, they also look attractive, like Wari Energies. And also, I think the overall gamut of these power stocks should see higher levels from here on. And if I can just add an insurance sector to it, I think that is also one sector which has been neglected big time. And if you see, that is one sector which has shown strength last week, and this week also it's showing some strength. So I think from the insurance space, ICICI Pru, ICICI GI both look interesting to me and should see much higher levels from here on. So insurance and I think power both should stand out for me in the next 1 to 2 weeks.
Talk coming in right now on what the energy basket is looking like. What's actually, down today is a Varun Beverages, a Godrej Consumer Products, Marico. All these FMCG names are the ones which are taking a little bit of a beating. Having said that, let's put it into context as to how FMCGs actually moved when, our markets were crashing. The world was uncertain. It was actually FMCG which was the most resilient of the lot. So I don't know if we can bring up the 2-month chart or not, because in the last 2 months, you've definitely seen an uptick in the FMCG names come in. But Pashupati, what is your own sense? You think there are better plays in the market right now than FMCG, or would you go with it as a safer investment right now?
See, honestly, if one was to come in with fresh money today, one would definitely buy FMCG, one would buy pharma, one would buy some infrastructure. The question is whether you buy IT and I would guess you'd buy some of the banks, because the banking sector is a large chunk of the index. So you would definitely buy some banks. So I'm not so wild about that idea. But the thing is that at the end of it all, do you buy IT? Yes, it's a big chunk of the sector. Would you be fully loaded on IT? No, probably not. So I think that's what you're seeing. You're seeing some people coming back into the market from overseas, and they're looking at taking a position where they've been completely out for a while. And then they are buying a little bit of IT because they need to have some IT compared to the benchmark indices. That's my thought. It's not that people love IT and they're wanting to load up.
All right, so that's the take coming in, especially when you talk about the IT space, or for the matter of fact, FMCG space. But Pashupati, there are a couple of sectors that are actually now a bit wobbly, given the fact that what is happening when you talk about the tariffs and the entire rhetoric around that. So you have the IT space that we've spoken about, there's pharma, and the other one being auto sector. Now, if you have to choose between these two, which one would you go for? Would it be a pharma play, given the fact that, yes, India has a solid positioning when you talk about the pharmaceutical industry, especially with their global exposure? Or would you think that it is the auto pack that you look at?
In case I would obviously like the pharma pack, because I think pharma is there. Pharma is saving money even on US. I don't think it's going to be as badly affected as some of the other sectors, simply because they are supplying into the US mainly generic drugs. So I think they're here to stay. The auto sector is getting a bit patchy because again, banks, where the rates are going to go up, and also the demand seems to be a little less for autos right now. There hasn't been a lot of buying in this month so far, so what I'm hearing. I may be wrong, but that's what I'm hearing right now.
Other than banks and IT, which you've also, spoke about last week itself, are there any sectoral trends which you're seeing?
I think metals is one space which is starting to look attractive. You probably expect auto stocks to make a comeback. So I think what I sense today is also happening that many of these two-wheeler auto stocks, not the likes of Eicher Motors, but the underperforming ones, Hero MotoCorp, Bajaj Auto, these stocks have managed to make a new multi-week high for themselves. That's a positive sign. Then you have seen, the other auto stocks, the likes of Escorts, TVS Motors, and I think Ashok Leyland. Even these stocks have come back to their multi-week highs, closer to their long-term moving averages. And these stocks have not been huge underperformers in the last 6-7 months of the price correction for themselves. So that I believe could be another sector which could make a comeback, even though there's not been too much of an evidence of a major short covering into this pocket as of now. So maybe I think what we're seeing as a pattern is that banks and financials are the ones which are leading the charge, because there's been a blend of short covering as well as long built up happening across the large cap names over there. And then most of the other pocket, the likes of metals, auto, some bit of IT, you're seeing very minor traces of short covering happening, which means that the pace of rally should intensify in case if these stocks see another further leg up. So I think that could be another pocket which traders could keep an eye on.
All right, so those are some of the sectors that are looking pretty attractive in trade today. Let's take a look at some of the stocks actually moving in trade today. You have HDFC AMC that is seeing good up move on back of its earnings. And post that, you have the brokerage commentary coming in, target price hikes coming in for HDFC AMC. The stock is trading higher by 5.7%. You have Vedanta also that is actually seeing a very good up move in trade today. In fact, it has extended its rally in today's trading session on back of a favorable court order coming in. It's the fifth straight day of gains coming in for Vedanta. Yes Bank, HDFC Bank, ICICI Bank, all of them actually reacting to their numbers given the fact that they've beaten the street estimates. You also have National Fertilizer. Take a look at that stock because that one is seeing an up move on back of new plant plans. And also you have Devyani International that is seeing a good up move as the board has approved an acquisition of a biryani company, that is Biryani by Kilo. So on back of that, you have Devyani International seeing a good up move of about 4% of, so it is gaining for a 7th consecutive session. So these are some of the counters that are seeing good up move. But that brings me to the next question to you, Pashupati. I wanted to understand what's your view on the entire QSR space. Do you think that now is the time is ripe for all of these names to actually make a comeback, the likes of Jubilant Foodworks, Westlife, or for the matter of fact, the players like Devyani International?
Well, we are at an inflection point in society. I won't say in the markets, but in society, whether we're going to go towards the QSR or whether we're going to regress backwards and start going back to the unorganized sector again, because the unorganized sector is still cheaper than the organized sector. So I think that, we're basically sitting at the point where people are having to choose. And, something like a QSR is a marginal expense and people can do without it. Whereas if they don't have money in the bank, they will be out there cooking at home and saving money there. So I don't know which way.
But just looking at some of the other movers in trade, and today's weak link only seems to be FMCG. But Aditya, as a trend, do you think we're going to see an across-the-board move? What started off with banks is going to rub off on the rest of the sectors too? Or do you think that this market will have its share of any underperformance sectorally?
What we actually witness in market these days is there is a very swift move and a shift from one sector to the other. And in fact, that is what we witnessed from FMCG, it moved on to the banks, and now from banks, it's moving on to real estate to some extent, to IT. And I think a lot of catch-up will happen in auto as well. So definitely, I think a lot of broader sectoral participation we are going to witness from here on. Maybe banks can take a step back, as I mentioned at the start, and autos, IT, and some of the real estate stocks can also take leadership. And in that midst, maybe smaller banks can start to outperform names like IDFC First and CSB Bank. These are some of the banks which can start to outperform. So definitely, I think money is going to stay here, and there could be some kind of a sectoral shift from one sector to the other, while I don't see too much of a heavy correction in the markets getting into anytime soon.
Right. We have Pashupati back with us. Pashupati, you're just making the point on the QSR space, and you believe that we are at an inflection point when you talk about that space.
Yeah, I mean, I would say I would even put in the same breath the Swiggy Zomato thing. Now, we would all love to have Swiggy and Zomato in our lives, but all of a sudden, if people have a cash crunch, and I'm not saying it's there now, but it could come because right now you are at a point which you could be going better or worse, and you're just sitting on the fence waiting for things to happen, particularly waiting for comments to come out of the U.S. Policymakers, some of which are good for us and some of which are not good for us. So, and apparently Vice President J.D. Vance is also coming to India, or he's come to India to meet Modi ji. So I don't know what's going to happen, but whenever, weekends in the US tend to be time for statements to be made. And of course, today they'll be a little bit judicious because the Pope passed away. But I think in general, they make a lot of noise on the weekend and then they try to negotiate during the weekend. So far, it seems to be, the negotiation seems to be going in the US's way. So that's what I'm seeing.
Yeah, interesting. That's, of course, Swiggy. Zomato, of course, has had more news flow as well attached to it with regards to the FI ownership as well. These are some of the stocks which are in focus. Kunal, I don't know if you have enough data for Swiggy, but go for Zomato, you think?
Yeah, Eternal. I think that's a stock which is looking attractive at current levels. And I think what's happened for this stock specifically shows that twice or thrice the stock had broken below the 200 mark. Now apparently the news flow which started off, which triggered the selling for Zomato, for erstwhile Zomato, was I think around 255 or 260 thereabouts is where the stock had started to crack. So almost like a 20-25% correction already happened for the stock from those 260 levels, and then twice or thrice the stock formed a low sub the 200 mark, and from there on you're seeing the stock eventually seeing increase in volumes. So this is a classical sign of first the price action being more reactive to the news flow, then the prices eventually settling out, bottoming out closer to a psychological round figure mark, in this case 200 or closer to the 200 mark, and then gradually you're seeing the stock moving up higher. So I believe that with this base at 200 formed for the stock, I think from here on we can expect gradually that if the markets recover and if we just stay on to that course of uptrend for mid caps, small caps as well as selective large cap names, I think eventually we would probably expect this stock to also come back toward that 260 to 285 kind of a mode.
Right, so that's the take coming in on Eternal, that is erstwhile known as Zomato. But let's put the spotlight on one of the most important events that's taking place, given the fact that you have the US Vice President J.D. Vance that has kicked off his 4-day visit to India, as he and his family have already arrived in India, and also he's expected to meet Prime Minister later this evening. So let's hear out actually what's the likely agenda for this meeting. Sumita?
Yes, there's a lot of excitement right here in the national capital. Hectic activity going on as United States Vice President J.D. Vance, along with his family, arrived in New Delhi a short while back. This is a key diplomatic visit after Donald Trump got sworn in as the President of the United States. Before J.D. Vance, there was Tulsi Gabbard, the country's intel chief, who visited India. Now, this visit assumes significance given the fact that it is happening at a time when there is a 90-day reprieve that's been given by the Donald Trump administration to countries across the globe, with the exception of China. India and the United States are also negotiating the first tranche of the bilateral trade agreement, which both the countries are looking at arriving at or finalizing by fall of this year. The number 3 reason why this visit is important, because United States and China, well, there are tariff tensions building up given the scope of tariffs that has been increased on China, from China to the US as well. China, meanwhile, is reaching out to its other Southeast Asian partners like Vietnam, Cambodia, Malaysia, and even India. So this visit assumes significance from that point of view as well, on how the United States is looking at India as an alternative to China. So what's expected today? Well, J.D. Vance will be meeting with the Prime Minister this evening. There are members of his cabinet also expected. There will be US administration officials also who will be accompanying J.D. Vance. So that will be key. The outcome of that meeting will be key. We're given to understand that the two sides could talk about their energy cooperation, on fast-tracking the bilateral trade agreement, on technology cooperation, on defense cooperation as well, given that these are some of the key pillars of the partnership between the two nations. So that is key. Meanwhile, J.D. Vance is expected to leave for Jaipur tomorrow, where he is expected to give an address. So his commentary tomorrow will be keenly watched out for. From there, he leaves for Agra to visit the Taj Mahal, and then 24th, he goes back to the United States.
Okay, a very crucial visit, and we will get you up to speed with all the developments there. But Sumita, thanks for that update. Let's also get in some closing trading ideas or BTST ideas as well before we move forward. Kunal, what's on your list?
So I'll go with two buy calls. The first one is one Poonawalla FinCorp. That's a chart which is looking extremely attractive, almost like a V-shaped recovery, close to that 395 plus mark currently trading. So would look out for 415 as a target, stop us at 387. And Kotak Bank is the other stock which I would continue to believe that could remain a lot more stronger even from current levels. Low beta, low to moderate beta kind of a stock, and given a breakout again about 2200 mark for Kotak Bank. So keeping 2200 as a stop loss, would revise the targets higher to 2280, 2300. Traders could take a fresh bet at current levels.
Right. Aditya, any BTST trades that you've identified?
Overall, realty is looking interesting to me, Aisha. I think one can go fresh long at current levels for a target of 1800 on the upside with the stop loss at 1600 on the downside. The second one is Polycab. I think after a decent bit of a correction, the stock has now formed a base, and now it's seeing some kind of an up move, almost on the verge of a breakout from a W pattern. On the upside, 1800. On the upside, targets will be around 5600 with a stop loss at 5400 on the downside.
All right, so those are some of the BTST ideas coming in from our experts. Pashupati, let me come to you and get your view actually on these capital market plays, the likes of a BSE or for the matter of fact, CDSL, also AMC companies. How are they looking to you at this point in time? Do you think a good investment opportunity?
Well, I think that they are there in the public domain, and people do want to buy these. NSE is supposed to get being floated soon. So I think that's one of the reasons why BSE has been going up, because people want to get a proper valuation on NSE. I actually like things like CDSL and also some of the other exchanges like IEX and all. I've had IEX in my portfolio for a while. And, so I think those are good, solid stocks. NSE will come, then maybe NSDL will come. So it's all good. I mean, that sector is therefore here to stay. And we got infinite growth because it's all internal. It's all part of the country's growth. And as things get more organized, we'll have more players in the market, and more information that has to be dematerialized. And so therefore, CDSL is also in the game.
That's the take coming in right now on some of those capital market plays. And I think BSE has hit a fresh life high as well for itself just today, I think. Aditya, have you been mapping the charts of any of these capital market plays, either a BSE, CDSL, etc.?
Oh, yes, Aisha, definitely. In fact, as a disclosure, we have these stocks in our portfolio recommended to our clients. Talking of BSE, yes, it's at a new all-time high in trade today. Looking forward to it hitting levels of 6,600 on the upside. Apart from that, an MCX is also looking very interesting to me. I think very soon it will test levels of 6,500 to about 7,000 on the upside. So both MCX, BSE, we're still quite bullish on both these stocks. Apart from that, CAMS is also something which can be looked at apart from CDSL. I think CAMS can also test levels of about 4,400 on the upside. So this entire space of CDSL, MCX, CAMS, BSE, all of them are looking very interesting.
All right, so that's the take coming in on some of these capital market plays that are looking good on the charts at this point in time. Take a look at Tech Mahindra. That one is actually seeing a good up move, 5% uptick coming in for Tech Mahindra in trade. Trent, the other one, actually seeing an uptick of about 4.3%. Remember, one of the closing trade ideas coming in from Kunal, that's Trent. IndusInd Bank, Hero MotoCorp, all of them holding on to good strength. While on the flip side, you're seeing weakness actually creeping for the FMCG pack. It is ITC, Asian Paints, Nestle, HUL. They're the one that are losing in trade. Apart from that, you have HDFC Life reacting to the numbers. Adani Ports also pretty weak in trade. Kunal, I wanted to understand and get your view actually on Adani Ports. How is this one looking on the charts to you? And not just Adani Ports. Let me actually widen the horizon to talk about the entire Adani group of counters. How are they looking?
So I think right now we are looking at a point where Adani Green, Adani Transmission, they are starting to look a little bit more, I would say, stable on the charts. Earlier these stocks were going through a very sharp selling. We saw I think many of these stocks correcting by 20-25% and more in the last 6-8 months. And there was a point where I think in February, March, where these stocks didn't find any major buying pattern. You saw these stocks remaining a lot more sideways. But right now, I think these stocks have recovered. I think Adani Enterprise and Ports, they've come back above their respective 50-day moving averages. They've yet to cross over their long-term averages by a decent margin. But I believe that eventually these stocks would also make a strong comeback. So I think once the market settles into a phase that they move from sectors other than the banking, the financials. You'd actually expect that many of these larger cap names would eventually find a lot of buyers. So I think it could be a matter of time that these stocks may pick up in terms of price action as well as momentum.
Okay, that's the take coming in on some of these Adani Group names, which are looking interesting. I want to see what BHEL is up to. They've registered a revenue of about almost 27,350 odd crore rupees. That's an uptick of about almost 19% on a year-on-year basis. And the order book as well is looking quite comfortable at 1,95,000 odd crore rupees. They've secured their highest ever order inflows during the year gone by, amounting to about almost 92,000 odd crore rupees. But BHEL had a somber start, and from there it's just been very, very quiet in trade as we speak right now. Aditya, from the entire cap goods pool, what's looking like a strong show? Because even L&T hasn't quite participated yet.
Yes, absolutely. In fact, L&T is probably one of the weaker stocks within the Nifty 50 pack. And talking of DHEL, that too is not looking that strong at the moment. Maybe on the upside, 240 to about 250 is what it can test. I will still wait out for some more time to see how these stocks shape up, maybe some more bit of consolidation. And once the sectoral shift happens from what is buzzing now, then can be the next leg of rally in these capital goods stocks. So for now, I'll wait and watch, not be too much in a hurry to get onto these capital goods stocks. But surely there'll come a point of time when these stocks will also start outperforming.
All right, so that's the take coming on some of this capital good names and how they're looking on the charts at this point in time. But looks like we are actually going to shut shop near the day's highest point, at least for the benchmark indices. On that note, thank you so much, Pashupati, as well as Kunal and Aditya for joining us on the show. And Aisha, yes, no complaints. A long weekend really bodes well for our Indian markets.
Yeah, just that we don't have any up until I think August. Closing in pretty strong. We've got a 1.25% uptick coming in for the Nifty itself. It's a 288-point move. Bigger a move for the broader markets. They've managed to hold out well, but today has really been all about the Nifty Bank. The fact that we made it to that all-time high, 55,300 a print on the Nifty Bank on closing. And today, some of those globally linked, beaten down spaces are the ones which actually overtook even the Nifty Bank. Look at the move on the Nifty IT, Nifty Metal. They were the sectors which were the leaders. And let's talk about IT here, because look at Infosys and how it's actually closed it for the day. Even though the numbers were not really all that great, but it almost smacks of some bottoming out, at least in the near term, for the entire ID pack, not just Infosys, but look at a Tech Mahindra. Look at what was happening with HCL Technologies, or for that matter, Tata Elxsi as well, wherein the numbers were weak. But that stock has actually managed to hold on to nearly a double-digit gain, at least on the futures for itself. Other than that, of course, there's been Telecom led by Idea, which had a very strong show today. Banks did quite okay. Axis, SBI, they were all holding up very smartly in trade. There was a trend which moved up about 4.5%. M&M looked smart. Hero MotoCorp, Bajaj Finance, these were all names which held out very, very smartly. Though on the flip side, Bharti had a much more sedate day. ICICI Bank gave up pretty much all of its morning gains, just marginally high is how it's going home in trade. And that was pretty much the case with Jio Finance and NTPC, Unilever, Adani, Ports, etc. as well, which closed in the red. But Cheryl, what about the broader end of the market?
If you look at the broader end of markets, yes, pretty supportive at this point in time, with also you have the small cap as well as the mid cap index in the positive territory. Strong show coming in by the broader markets. And let's not forget, it is a fifth consecutive session of gains coming in for our markets, and we are shutting shop at 24,120 when you talk about Nifty, with the Nifty Bank actually scaling record high levels. But on that note, we're out of time on this edition of Closing Trades. Thank you so much for watching. Stay tuned to ET Now for more news and updates.